Just a week after DeepSeek stock market sell-off, we have another major sell-off in the stock market as President Trump's imposing 25% tariffs on Mexico and Canada, 10% tariffs on oil from Canada, and then 10% tariffs on China. What this will mean? Well, this will likely raise inflation in the short term in the first 3 to 6 months. It'll raise prices ultimately by the consumer. The consumer will ultimately pay more. First, importing businesses will pay more, and those costs will be passed down to consumers. So this will likely raise inflation in the CPI metrics for the first few months. And then after that, it'll likely decrease growth, at least for the next couple months after that. So this makes the Fed situation a little bit trickier. They might not cut rates as much at first, and they might pause interest rates from here for a while due to the uncertainty of the effects of these tariffs. Look, Mexican avocados, it'll be more expensive in the supermarket. And then Canadian oil will also be a little bit more expensive. Granted, we have imported a lot of oil recently, and we have been under record oil production in the U.S. But either way, we'll likely see prices a little bit higher in the pump. I wouldn't be surprised if gas prices went up 50 cents to 70 cents from this, as well as some prices on fruit like avocados in the supermarket. And then the China tariffs, I was a little bit surprised they were only 10%. Trump was talking about having 60% tariffs on Chinese goods. So this shows he has room to go higher on Chinese tariffs. So obviously we'll see what happens. But look, those are some of the negatives about tariffs. However, throughout U.S. history, when we were founded as a nation, we used protective tariffs as a way to raise revenue. And we did this throughout the late 1700s and throughout the 1800s. And President Lincoln was a big fan of protective tariffs. And President McKinley and Theodore Roosevelt were also big on protective tariffs. And we used these protective tariffs during the Gilded Age. And you can make an argument that it was a period of record economic prosperity. Granted, there were huge inequalities and divides between rich and poor, but we raised a lot of our revenue through tariffs, and we had little to no income tax at that point. Then about 1913, the tides turned, and we raised more revenue from income tax and less from tariffs. So the only silver lining I see from these tariff policies is that perhaps if we raise enough money from the collection of tariffs, then perhaps we could lower our federal income tax slightly. And if we could do that and lower income taxes for the middle class, could that be a benefit? Perhaps. But this would mean we would have to raise a considerable amount of money from these tariffs in a way of almost thinking them like a sales tax. So if we raise enough revenue from this increased tariff or sales tax, then perhaps we could cut our federal income tax a little bit. Trump, in a way, did this in his first administration, where the tariffs he had during his administration, he was able to lower the top federal income tax rate slightly. And if this seems like it's going to be done on a larger scale, so hopefully that could be done even more so. If income taxes could be dropped even more because we're making a lot of money from these tariffs, then I guess ultimately, that could be good, and it could protect American industries and manufacturing. And in the long run, if we make up the production, of certain of the things that we tariffed, and we make up the production in the U.S. and we have more supply, then in the long run, ultimately, prices could go back down, but that could take a while. So that's the nuances with the tariff policy. In the short run, it's going to cause inflation and it could hurt growth, and that's why the market's kind of reacting to this, because the market doesn't like that uncertainty. But in the long run, perhaps if we raise enough money for it, we could probably lower some of our federal income tax if we get that revenue from tariffs. I wanted to talk a little bit also about a week in recap. Obviously, we had the Federal Reserve meeting. Jerome Powell said he's not in a rush to cut interest rates, so will likely keep rates, like this for a while. It seems like, we're almost, the risks are in balance between slowing growth and inflation. And I think Powell just wants to sit back and see how Trump's policies and the economic effects will be. And I think that's the right move. So he was a little hawkish in the meeting, but not as hawkish as feared. And in my view, I take that as dovish. So the markets kind of reacted to that. They sold off at first out of fear, but once they saw he wasn't as hawkish as feared, and he even admitted that rates are still restrictive, that helped the market recover off its lows after the Fed meeting. Then obviously since then, we had tech earnings. We had Microsoft's cloud growth was a little disappointing. And we had Facebook. Facebook had pretty good earnings in the sense that they're not stopping their AI spend. And then Apple's earnings, their iPhone sales were weak, I think partially because of China, but their overall services revenue was good. And then Tesla had a pretty poor earnings report, in my opinion. They missed both earnings and revenue. And however, the silver lining with that is that Elon Musk was really saying that, first, in June of this year, in Austin, Texas, Elon Musk is going to unveil ride-hailing and robo-taxis with unsupervised full self-driving. So that left investors optimistic that that's coming not only soon, but this year. And look, 90% of the Tesla story is AI and autonomous, not really EVs. The EVs and the lack of growth in the revenue and earnings per share was a little disappointing. Now, I'll admit that, especially if you look at Tesla as a car company, but I don't. I view it as a technology conglomerate. And Dan Ives saying that 90% of the Tesla story is AI in terms of its, full self-driving. And I feel like they're going to license that software for other automakers. And then not only that, but it's Optimus humanoid robots. That'll be a huge business in of itself, and Tesla's really working on that. So that's where I really think Tesla's growth story is. And lastly, I also wanted to touch on, a little bit more about DeepSeek. I made a video last week when the market was selling off hard and overreacting about DeepSeek. I think there was a huge overreaction. The reports now are really showing and saying that there's no way that DeepSeek could have had that model and spent $6 million. That simply can't be true. It's likely that they had some of NVIDIA's more advanced chips, but not only that, it looks like DeepSeek used a lot of their data and their training from OpenAI's ChatGPT. They pretty much copied that. And, that's, something to keep in mind with China. They like to use our intellectual property and technology and copy it in a way, make some engineering changes. But remember, us as Americans, we had the frontier of this AI within the LLMs, and it seems like DeepSeek just pretty much copied our technology while we spent all the money, and in a way, it also puts if we use DeepSeek and download the app, kind of like TikTok, the Chinese have our sensitive data and queries. If we use DeepSeek. So that's something to keep in mind in terms of the intellectual property that China is getting from us. But either way, I think the DeepSeek story, it's a nothing burger, in my opinion. Look, obviously the cost of AI and compute is going to go down. And according to Jevons paradox, as Satya Nadella, Microsoft CEO, mentioned, as the cost of it comes down, it becomes commoditized, and there's actually more demand for more AI use cases throughout the economy. So that won't stop and slow down, in my opinion. It'll, if anything, it'll only speed up the demand for the pick and shovels of NVIDIA's GPU chips. As Meta said in their earnings, they're not slowing down spending. So it's gonna, we're still in this fourth industrial revolution. And if anything, I think this will speed it up. because it's, as it gets cheaper, there'll be more demand for chips, as I said, for various use cases. But this almost Sputnik moment and competition between the U.S. and China, as well as other world leaders, has just begun, in my opinion. And I think this is still very good for AI plays and the energy infrastructure and nuclear in order to power them.